Welcome to the B.F. Anderson Technical Report for February the 18th. Warren Buffett, very wise man, one of the best investors in history. He has given me a lot of good advice. I've read extensively about him, but some of the best advice has been, I'm going to quote this, everybody's got a different circle of competence. The important thing is not how big the circle is. The important thing is staying inside the circle. You know, I can't tell you how many times I'm asked about Bitcoin and various things like that. And I just have to say to people, that's not my circle of competence. I really don't know anything about it. Therefore, it's best that you go somewhere else for that type of advice. Same thing could be said about real estate investing. Same thing could be said about investing in commodities such as gold and silver. But anyway, I think it's good advice to stay within the areas that you understand. Let's get right into the charts. Here we have the NASDAQ. We continue to be in a bull cycle here. Now we are getting somewhat of a pullback the last couple of days. You can see a little bit of a pullback here, but holding the upper moving average, which is the 25-day. Then we have the weekly graph, which is the 35-week moving average. No problem there. Continues in a very strong uptrend. On the monthly graph, we go, daily, monthly, weekly, monthly. Now we're on monthly. This is the month of February. You can see the market has made a new high this month, continues to be very constructive with the 10-month and 20-month moving averages. Same can be said for the NASDAQ, continues very constructive. Now China, as you can see here, China hit a new high this month. This is the ETF that we use called the Golden Dragon, which is all the Chinese stocks that trade here in the United States. Now on our net new highs, you can see that we hit pretty much record numbers up here. Things are cooling down a little bit. We got an upturn in the 10-day moving average in the New York Stock Exchange, net new highs. So you can see also the index itself is positive. Now the new lows, no problem. We stay in below 40. Haven't seen the new lows get into any type of serious situation for quite some time. Now on the aggression index, continues in an uptrend, made a new high, now pulling back somewhat as things cool down a little bit, and they need to. Here's the indicator itself, which is the 40-week moving average. Everything fine there, in good shape on that indicator. On interest rates, now this is the 10-year U.S. Treasury yield. This is what's causing the volatility in the marketplace. We're seeing interest rates get up to the highest reading we've seen in some time. So we're at 1.3% on the 10-year Treasury note, which we had mentioned that if we broke above 1.2, we thought it would be meaningful. So interest rates are moving up, as well as oil prices are moving up, as well as the financial stocks, which are benefiting from the higher interest rates. Now, we're going to talk a little bit about inflation here as we get into the video. S&P 500 on a daily basis, very constructive, no problem. We're above the 25-day and the 50-day. We are above the 200-day moving average for the S&P. However, quite a bit of white space in here. Would be not out of the question for it to narrow like it did back here. Put-call ratio, where we're measuring fear and greed. Greed continues to rule the day. A lot of greed in the market right now. In other words, there's a lot of call buying, which is optimism, versus put buying, which is pessimism. Volatility index, as we noted last week, this is almost a historic drop in the volatility index, which is the VIX. When you get a drop in volatility like that, it's very positive. Now, this was primarily caused by the GameStop, Robinhood situation, but now things are cooling down, getting back to normal. That will cause the market, hopefully, to do well. Now, this is an indicator I wanted to point out. This is the NASDAQ, and we're measuring the new low percent of the NASDAQ on a weekly basis. Now, if we go back through time, and the reason why I wanted to mention this is that this has only happened one other time. In other words, the percent of new lows spiked here in 2008, 2009, after being at a low level, spiked, and then came back down again. We're seeing the same thing here. This was the March 23rd spike in new lows and then came back down again. Now, the only point I want to make here is you'll notice here that during this spiking period, the market did make a low and went into a very nice uptrend. But notice the trend we're in right now. It's quite steep. So, in other words, there's the possibility of a pullback. The market is awfully hot. Now, if we look at the number of new highs, just to kind of take a look at that for a second, you can see here that going back through history, the new highs on a daily basis rarely get above 500. Well, look what we did here. We spiked up to 700 new highs. So the point being here is that this is a very constructive environment that we're in. It's just that things have gotten awfully hot, could cool down a little bit, but not necessarily looking like a bubble yet. Now, if we want to take a look at inflation for a minute, one of the ways to do that is the Commodities Research Board, measuring the price of commodities. You can see here that it's really, the CRB index has been in an uptrend. Now, we also notice here that the 10-year Treasury yield, in other words, rising inflation will cause rising interest rates. Rising interest rates will cause the bond market to go down, not up. In other words, realize interest rates go up, bonds go down. So you can see here that we're getting quite a spike here in interest rates along with a rise in the CRB index. Just be aware of the fact that inflation is looming. We are seeing some signs of that, especially in the price of oil. Now, trend following. Let's talk about trend following for a minute because, we hear a lot of talk in the news about bubbles. But in an uptrending market, you want to be aggressive. In a downtrending market, you want to be defensive. So, in other words, as long as the trend stays positive, that's good. Now, if you go back to the March 23rd low, we went heavily into cash in this period right here. And we basically missed out on about a 33% drop in the market, in the NASDAQ. Then as we got the buy signal right here, we started working our way back in again and got to benefit from this uptrend. But the thing to realize here is it can get a lot worse. This is 2000. Realize that the NASDAQ gave us a sell signal right in here and proceeded to drop 78%. Then if you look at individual stocks within the NASDAQ during that period, Amazon, I can remember selling Amazon around $80 a share back in this period, and I got so much grief because everybody was so much in love with the stock, but then it dropped 93% all the way down to 7.5. We got out around 80-ish after peaking up around 100. How many investors could have tolerated a drop like that? I don't know anybody. I just know I had a tremendous amount of trouble doing something like that. Anyway, let's get into the top 5. We're still seeing Tapestry, which is, female purses for women. Coach, Kate Spade, continues to stay in a constructive pattern above the 10-day moving average. Snap, which is, we're talking social networking here, gapped up on earnings, kind of a flag in a way coming off that pole. Would watch it here. A breakout above 65 would be constructive. Here we have SM Energy. Like we mentioned, oil prices seem to be creeping up, but we're seeing it in the oil stocks as well. You can see here, SM Energy is now hitting, a new high here at over $14 a share. Now, Novavax, which is involved with the vaccine, we got a big gap up on an announcement. Stock rallied. Hopefully it holds this gap right in here. I would continue to watch this stock. It's a little too risky for me at this time. Roku continues to be strong. Now we're having a pullback today, just like everything, however, holding the 10-day. So that's it. If you have any questions, please give me a call. Thank you very much.